Joining in right now in our studios, we have Rajesh Sharma, Managing Director, Capri Global, who's with us. Thank you so much for joining in. And I have to say that within the budget, you did have a lot of focus on the NBFC sector. But the question is, do you think that so far the steps have been enough? What have been your takeaways?
So the government has allowed the major boost to NBFCs that they have given a partial guarantee to the pooled assets of sound NBFCs. Where the government will provide 10% guarantee up to 1 lakh crore in next 6 months lending. Operative guidelines are yet to be issued by Reserve Bank of India. But I believe this will be a big boost because liquidity squeeze which is being faced will be addressed. Plus this measure will not have any impact on the exposure norm on the or sectoral exposure cap because the direct exposure on the pooled assets. So I think it is a good measure. NBFC's liquidity issue will be addressed by a large extent. And second measure government has announced is that they have also given other reliefs including the tax provisions where the borrower and the NBFC both have been some tax provision have been changed where the interest will be allowed to be taxed on a receipt basis on the NPA accounting. Similarly, the borrower will get the deduction only when the interest is actually paid. So I think this is also going to help the NBFC. Third is the regulation has been now moved from Housing Finance Company Regulator from NHB to RBI because there was a possible conflict of NHB used to act as a lender and refinancer to the Housing Finance Company. Now I think that has been segregated by moving the supervisory power and regulatory aspect to the Reserve Bank of India.
Right. A lot of focus was given on the SME platform, the small companies, the small and medium enterprises. You have a lot of exposure over there. You tend to give a lot of loans over there. Last time you mentioned. Do you think that will lead to a pickup as far as demand, the comfort at your end as well to give more loans?
So I think if the liquidity is further infused in the NBFC, then the more lending will happen, which is currently is curtailed by all the NBFCs in smaller or bigger way. I think that if the credit flows back to the MSME segment, then I think it is going to help everybody and more particularly MSME sector where banking, formal channel is not lending to them.
So if you look at the MSME space, it's been in a stress for a while. There has been low growth over there. Because of GST, they had, a hiccup coming in. Do you expect first the growth to show and then probably the lending to increase, or people will anticipate that now things would start growing in that area?
So besides other factor, I think if NBFC liquidity is sorted out, that is also going to change this. Once the lending happening start, the growth and momentum to MSME sector, which is slowed down, will pick up back.
Okay. Cost of funds, do you see them coming down? The moves to allow FIs, FPIs to invest in debt. Do you also see transmission going forward if we do see the glide path moving lower? Just in terms of overall liquidity, how do you see things easing up? Everyone's talking about how it will, definitely make a difference, but actually on ground, the implementation.
So on ground, there is no change in last 15 days as such because unless the operative guidelines are not issued, bank really download those to their credit department. Actually, transactions start happening. Till then, but there's a hope that yes, in next 10 days or 15 days, we will see clarity how these pooled assets will be bought back. And this effectively give a big boost because the concern of banks of high NPA or the potential loss in the pool is completely addressed. 10% is a very, very good markup on giving the guarantees by the government. Any pool, you don't expect this kind of losses. So the bank will be comfortable. I think it is a big boost. Operationally, it has to happen now.
So when we saw the problem coming in regarding liquidity, it took some time before it actually went into the disbursements. Disbursements got stopped. So now that measures have started to come on various fronts for NBFC, liquidity infusion rates have started to come down. By when do you expect, with that lag effect, the growth to start come in the sector once again?
I think we can expect the growth to start from the next quarter onwards. We will assume that liquidity will flow in by the end of September.
So Q3.
So Q3 and Q4, we should see the normalcy back in the sectors.
Okay, now the government had that one-time 6-month credit guarantee for the purchase of assets for the high-rated NBFCs up to 1 lakh crores. Is this sum enough in order to give the necessary boost to improve the liquidity?
I think 1 lakh crore is a good amount. It should help every small or big companies, because this is a measure where your rating is not important. If you have a quality pooled asset, then you can get the funding, because you can have a potential and possibility to get AAA rating for your pooled assets.
Right. So just talking about this pool of assets, a lot of companies are also looking to sell assets. How is that market? Have things slowed down over there? What is the kind of discount that people are paying for, even decent assets now? Are things better in that area now?
Things will looking up better, because the pricing is an important play in the lack of adequate liquidity. The pooled assets pricing has substantially gone up, and there are lesser volumes.
Okay. Let's talk about, some of the impact on you as well, in case, in terms of some of the measures we've been talking about, kind of impact you see, particularly on margins as well, going forward.
So we see that cost of fund, which has gone up in last 6 months, 8 months for everybody, including us. And I think that should come down. If that comes down, then our spread should be, we should be able to maintain the spread, and we should be able to improve upon it. However, since the volumes are lesser on the lending side, it's easier for us to pass on our any cost of fund increase as well, because there is lesser competition in the market nowadays.
Okay.
Right. Just a word on rates coming down. The 10-year GSEC corrected going into the budget, then it is corrected now.
Yeah.
We spoke to SBI as well regarding a 5 basis point transmission, what they have done just about 20 minutes back. Do you think if rates come down overall, one of the key beneficiary of the sector, how earlier NBFCs have been, would it continue to be that way? The growth again would start in that direction if rates go lower?
So rates go lower for the other sector. So far, NBFC has not enjoying those benefits, because the money is not available, age required.
So, but between 2014 to 17, when rates went down, NBFC enjoyed the most.
Yes, but at the moment you see the GSEC have come down in last 1 year, but the corresponding benefit and the corresponding bond trading is not happening. That on the contrary, rates have gone up for this, because there is no adequate liquidity was available. Now liquidity coming back, I think in next quarter or so, it will start showing the impact.
Okay. Now, last time we spoke, you had mentioned that you're deferring your QIP plans due to the current market sentiment. In the setup, are you looking at plans to revive that? What's the timeline? What's the update?
No, what I said was that we have passed the enabling resolution. While we have an adequate capital adequacy of 34%, we will look at the right time, maybe down the line 6 months, 9 months. In any case, we have a 75% promoter stake. So with the new regulation coming in within next 2 years, we have to, in any case, bring it down. At the same time, with the growth we are anticipating, we will not the capital also. So at the appropriate time, maybe after 6 months, start meeting investors, and we'll explore that.
All right, then. Thank you so much for joining in our studios. You've really given us a roundup of what's going on with the sector as well as for the company in specific.